Good day, folks, and welcome to the Shark Cage BlackFin's podcast series. My name is Keith Kemp, President and CEO at BlackFin. I will be your host today. To start, I want to thank our sponsors. A real special shout out to all of BlackFin's preferred partners, Mortgage Flex, iEmergent, Cloudvirga, Take 3 Technologies, Lending Pad, Prudent AI, and our most recent and exciting preferred partner, Finastra, and so many more. All these firms doing extremely great things for the mortgage and lending industry today. If you don't know about them, I encourage you to check them out. Okay, so let's get started here. Today, I'm really excited to have in the Shark Cage one of BlackFin's preferred partners, Jessica Evett, VP of Product Software and Development at Cloudvirga. Welcome, Jessica. It's great to have you here today.
Thanks. I'm happy to be here.
Cool. We're going to have some fun. But before we get going, let me formally introduce you, Jessica, by sharing a little bit about your background. Kind of shows you kind of know what you're talking about when it comes to product and in this space. Folks, as I said, Jessica is the VP of Product Software and Development at Cloudvirga. Jessica has an extensive career in product development, project management, and services in the banking and mortgage banking space. It goes back a good 20 plus years. Most notably going back to her time as a project manager and senior IT project manager at Saxon. I remember the old Saxon days, no doubt. Prior to that, she served as Vice President of Business Solutions Technology at Bank of America. And another key career highlight was her role as VP of Servicing Project Management Office at NationStar, now in charge of product development at Cloudvirga. She is actively listening to her existing and new customers very, very closely to really understand not only what do they want and need now, but is really strategizing around where the puck is going, to use that Wayne Gretzky analogy, if I may. But from a customer experience standpoint, where is the puck going? Which is why I believe Cloudvirga continues to deliver a leading technology ecosystem for lenders. That basically helps stop the customer shop fast. And that's the key, right? In origination. As a former originator, Jessica, I love that focus at Cloudvirga and what you're doing from a product development standpoint. So it's great to have you. You're ready to jump in. I promise not to bite, maybe challenge you a little, but we should have some fun while doing it. Are you ready?
Yeah, absolutely. Love talking
Cool.
about this. As you mentioned, I've been doing this a long time and, I have a lot of enthusiasm and excitement about where we're going. So looking forward to it.
Yeah, well, I know our listeners are absolutely going to appreciate your perspective and key insights and some guidance that they need. Jessica, as we know, 2023 was a year that a lot of lenders paused on new technology implementation projects, really anxiously awaiting for some signs of confidence, right, coming back before finally pulling the trigger and implementing a new and better point of sale or lending ecosystem. So as lenders finally start to realize, quite frankly, that 2024 is projected to, as we talked about before, is projected to be a pretty good year. $2 trillion in projected loan volume. I mean, you and I both remember when 1 trillion was an average year. So what should lenders be looking for in that new point of sale or lending ecosystem that they really need to upgrade to and implement during the year 2024 to really be ready for an anticipated great 2025? I mean, before pulling that trigger, making a new tech decision this year, what are those new kinds of features, functions, or offerings that they need to start looking for or really leaning into that might create some significant change in their organization operationally, process flow, etc. So what are your thoughts on that?
Well, I think number one, it's to invest at all, right? Yes, the mortgage environment is very cyclical. Normally, if originations are up, servicing is down, or vice versa, right? We typically don't see a lot of default and a lot of purchase, right? It's usually one or the other. So I think that's likely why we've seen people pull back. It's okay, well, is there a default event coming? There's obviously rates, things are happening with rates. They don't look like they're slowing down. So should we put a pause? And certainly from a purely ROI perspective, you could sort of make the argument, well, if we're not doing a lot of originations or the amount that we expect, then it's worth kind of keeping things as they are because there's not, a financial reason to invest. I would argue this is the time to do it because at the point where the market fully recovers, and to your point, this year is looking like a generally good year, then you're behind. So you want to start now while you have the time to get the work done. And when it comes to, what you're really looking for, I think it's this idea of a point of sale plus, right? Historically, point of sale is just sort of facilitating the application, but I think there's a lot more to consider. Do you have a strong process around pre-approvals, that initial borrower home search experience, the scenario building, the modeling, all of those things that can generate a level of stickiness for a borrower to want to stick with you and actually execute that application process with you and continue all the way through. I think there's also opportunity in thinking through how to kind of reduce your cost per loan. How much can you automate? How much can you make it intuitive for your loan officers where maybe historically they've been doing all of the decision making? How can you increase and improve the borrower engagement throughout the process, right? So historically,
Mm.
it's let me collect every document I could possibly need, and then I'll parse out the information. How can I make that more intelligent and keep you engaged so that I am sort of shortening the time frame, but also reducing the borrower effort required to kind of get through the process. So I think it's make the investment, but it's also really look for a solution or a partner that is moving in the direction of trying to really address the length of time, the risk, and the effort required in an origination.
That's a really good point, Jessica. So it's really a careful balance because I know as an originator, our focus was always, and we still hear this even as we're consulting lenders and clients on an active basis, is we hear, okay, we need to stop the shop. And the way we can do that is by giving that instant approval, if you will, to help one mitigate, our time as an originator, mitigate our risk as an originator, so that I'm not spending too much
Right.
time on a file that doesn't qualify for what they really want or need. So I've got all these things that I need in order to really help mitigate that risk up front. But I think part of what I hear you saying is you really need to balance that carefully with what does that mean to the consumer experience before you start hooking them on the relationship and the trustworthiness that they need to have with you. Sometimes you may have to couch some of those things that you need to acquire at the very beginning to try and get to that approval as soon as possible. Is that part of what I hear from you, is to focus more on the relationship, make sure you have an ecosystem that really it has all these other capabilities to capture those things to mitigate the application risks at origination, but yet so that you're reducing your cost to produce, but yet don't forget the consumer experience. Am
Yeah.
I
Yeah, I think
capturing that right?
that's a crucial point because when you think about who's buying homes, right? I mean, the data suggests that the historical home buyer, the baby boomer, they're kind of sticking where they're at. They've, already got property, they've got great rates, there's no need for them to potentially buy. Your millennial home buyer is relatively new to the market. You have Gen Z sort of starting to approach behind. So when you think about who's coming into the home buying market as the market starts to recover, right? Obviously, the rates have been a barrier to entry for the younger home buyer. They're looking for a frictionless experience because that's what they get from other types of solutions, right?
Hmm.
So when you think about your consumer and your client, don't think about it in the context of historically how mortgages have worked, right? There are companies that have been very successful in building a more digital based experience, and that puts them as a leading lender or provider in the marketplace. So you want as frictionless of an experience as possible and as easy of a process for a borrower as possible, right? I mean, I think, millennial and Gen Z um, home buyers have been in the social media age, right? Or purely digital. They can communicate with a company through Facebook Messenger, for instance, right? And never actually have to talk to anybody on the phone. So when you think about that experience, it's not necessarily a substitute for a loan officer. The home buying experience can be very complicated and feel overwhelming for a new um, consumer, but having a experience that meets them where they're at and the way in which they're used to communicating and collaborating with companies, I think is going to be crucial for any solution long term.
That's a really good point. I love that. And I know that that's been a primary focus of Cloudvirga from day one, and even more amplified since you stepped in to help develop the product, but and mature the product, is that borrower experience and really being in tune with that. So with that said, and we talk about, what lenders should be looking for in that new point of sale or lending ecosystem. What's your take on AI? I mean, isn't there this concern out there that lenders are going to adopt and adapt all these AI tools that is going to even further put the consumer relationship at risk? Is that okay? I know I'm kind of throwing this at you, off script, but
Yeah.
is that okay? Is that, how do they temper looking at those types of AI tools that are becoming available?
So the interesting thing about AI is it's a term that's often used incorrectly, right? There are a lot of different things that are billed as AI that may not actually be AI. I think there are a lot of concerns in the regulatory space about what a AI engine might be doing with enough information on a consumer to kind of build a digital profile, on them, and how that data then is proliferated more broadly, right, from an
Hmm.
engine perspective. So there have to be a lot of security controls in place when it comes to AI, but I think there are a lot of potential valuable ways in which AI can be leveraged. I think the question when it comes to a lender looking at AI solutions is really how well it's actually trained. Are we talking about it's truly machine learning at this point? Are we talking about agent assisted learning? Are we really talking about chatbots or
Hmm.
RPAs or things of that nature? So when it comes to AI, the issue I really see in application is when you're using it too early and it's not as trained as it should be, and it's very evident to a consumer that they're dealing with a bot or some sort of engine on the back end. There's nothing more frustrating than seeing a knowledge option, a question and answer option, a chat option, and knowing that that's not a real person because it doesn't actually know how to handle your question
Yeah.
and it's providing you information that is completely irrelevant. That's very irritating. So you have to be careful about how you deploy it. I think there are a lot of really strong opportunities on the back end that aren't necessarily consumer facing as well, where AI could be useful. If I have all of this data, I can start to model, I can start to better predict what the best outcomes for you are. If I have all of this data, even in the context of I'm running, DU or LPA all the time, I already know what the rules are for underwriting or, for any sort of initial analysis of a loan. I can start to take all of the data that I'm collecting over users' applications over time and
Hmm.
start to really evaluate that and say, okay, based on what I know about you demographically, financially, location wise, really anything that you could think of, then you start to be able to say, okay, well, this is going to be the most likely loan for you. So let's start with obtaining the information required for that concept and then go from there. There are a lot
Oh,
of
okay.
companies out there trying to blend OCR and AI. The challenge is that the OCR hasn't quite got there in terms of documents that are a little less structured, like bank statements. But once you have that and you could then pair it up with the idea of having a more automated engine for rules analysis, then it becomes a, potentially powerful tool. The value there being it standardizes, you can evidence it, right? The challenge, of course, will be what biases a true AI actually introduce, because there's a fair amount of, things happening in the AI space today where you can start to see that those engines become biased. So there's
Mm.
kind of the balance of that you have to think through, but I definitely think there are some real practical applications of it. I'm not sure we've gotten far enough with it to where I think they're necessarily ready for this type of thing, but I think they're close.
I think that's a great pearls of wisdom right there. And I think it underscores and just echoes what I've picked up on. Your approach with Cloudvirga is we need to take a very measured approach and carefully
Right.
balance, and validate. Trust but verify. Okay, trust this technology and these tools and widgets that they'll work. They'll help add some feature functionality and efficiency in the process. But let's not depend on it or just go after it gangbusters until we've really, tested it to make sure that it's not hurting the customer experience. And I can even attest to that. I have a client that I was consulting and I was working with their new bot system that they have, and we were going back and forth on my phone as they texted me, and I could. It was kind of cool in the new shiny object thing, right? But at the end of the day, I felt empty because I knew I was communicating with a bot, and that I didn't feel like I was really being served. Felt like I was being supported, but not served by. So it's a great wisdom, great insight and recommendations for folks on how to think about these features and functions that are coming across in these new point of sale offerings or lending ecosystems. And again, underscores the great responsible approach that you guys are taking in Cloudvirga.
Yeah, I think it's a powerful solution. There are a lot of applications or, practical ways in using it. When it comes to the consumer focus, I think there's, obviously the implications, regulators are starting to think this through. I know there's a lot of, regulatory think tanks or different, regulators within our industry and outside contending with how companies could, in theory, use your information and whether that makes sense in every application. So it'll be interesting to see how those things start to evolve. But it is crucial from a consumer perspective not to just put it out there to put it out there and say you have it, because not a lot of consumers are really that interested in it, right?
Yeah.
I don't hear a lot of customers saying, "Man, I really wish I had an AI engine I could communicate with about this origination." So the value proposition in doing it is, as a lender, it helps you potentially reduce the amount of resources you need or the time requirement of those resources by loan. But if it's very robotic and it feels disconnected, it sort of sabotages your ability to build that relationship with the borrower. And quite frankly, they're still in the application process. They could say, okay, adios, I'm out. I'm going to go find a different lender that I feel like I can actually talk to a real person. But
Yeah.
I think there are definitely some real value adds in terms of being able to mine knowledge and provide a customer a rich answer in real time, but it has to feel like, a communication and a conversation as opposed to, I'm asking a question and it's giving me something completely outside of what I'm asking for. So now I absolutely know this company is pushing me to an AI engine.
Yeah, boom. End of conversation right there. No,
Yeah.
it's great advice, great recommendations, folks. I hope you're listening intently. Great words of wisdom for you as you're looking at new point of sale or lending ecosystems to start implementing in 2024, because 2024 should really be the year of upgrade. It's time to upgrade technology. There's a lot of great, powerful tools out there, and Cloudvirga being one of them as a perfect example in their measured approach on these new features and function and whiz bang, capabilities within technology. All right. Jessica, thank you so much for being with us today and joining me in the shark cage. This has been a tremendous discussion on the key topics, ensuring that a lender's technology ecosystem is most focused on the need for a greater borrower experience and what to look for in a technology partner like a Cloudvirga. Folks, don't hesitate to learn more about how Cloudvirga is helping lenders by going to their website, www.cloudvirga.com, and reaching out to Jessica and Maria and their team. Until next time, this has been another exciting episode in the Shark Cage. Thanks so much for being here today.
Thank you so much for having me. Appreciate it.
Pleasure.
To find out more about the show or the information provided in this episode, visit BlackFin Group online at www.blackfin-group.com.